When I got close to early retirement, I thought the hardest question would be, do I have enough money? But that wasn't the hardest question. The harder question was, am I really ready to walk away from a steady paycheck? I'd spent decades working, saving, investing, and preparing. But when the time actually came to leave, I hesitated twice. I started thinking, what if the market crashes? What if inflation gets worse? What if I've underestimated what I really need in retirement? That's when I realized the biggest thing keeping me from retirement wasn't money, it was fear. There really is no such thing as the perfect retirement time. I started thinking, can I take early retirement offer? What if I retire Monday and the market crashes on Tuesday? And on Wednesday, I'm wondering, what the hell did I just do? If you think hard enough, there's always a reason in our heads to not retire. I was thinking the market is too low, interest rates are too high, there's talk of recession, inflation's coming back, there's an election, there's a war. Eventually, I realized that if I waited until everything felt safe, I would never retire. Nobody's going to come and tap us on the shoulder and say, okay, Jay, everything's perfect, you can retire now. That person doesn't exist. Another thing is I was still in saving mode, and saving mode was easier than spending mode. What surprised me was how difficult it was to switch from saving money to spending it. For decades, success meant putting money away. Save more, invest more, watch the balance grow, which that was fun. Then retirement tells you to start taking that money out. Right? You work so hard, now you got to take it out. Something about that feels wrong after 25 years of just training myself to be a saver. Eventually, I had to change the way I looked at money. It wasn't just a number on a statement anymore. It represented years of my life that I have already worked for. The whole reason for saving was to someday not have to trade another 2 weeks for a paycheck. After answering the 3 important questions in my previous video, I realized I didn't need to replace my salary. I also stopped thinking about replacing a paycheck and started thinking about funding my new lifestyle. Those are 2 completely different things. Hypothetically, let's take someone earning $100,000 a year. Maybe off the top, they're putting $15,000 or $20,000 into retirement accounts. Then there are payroll taxes, commuting costs, and other work expenses that you just don't really think about. At the end of the year, we might be keeping $60,000 to $65,000 of that, and that's what we're budgeted to live on, right? The important part was figuring out my number, and that number doesn't come from your salary. It comes from looking at what actually leaves your checking account month after month. The mortgage, utilities, groceries, insurance, travel, etc. The things you really spend money on. When you do those calculations, that's when retirement starts becoming a lifestyle calculation instead of a salary calculation. What I didn't want to do in my retirement was have to sell stocks every time I needed money. If the market fell 15 to 20%, the last thing I want to do is sell investments at a loss so I can pay normal expenses. So I found having cash and safer short-term money available mattered to me. If my lifestyle required $60,000 a year, having even a year of planned spending outside of stock market could change my whole conversation. Instead of the market is down, what am I going to do? It can become the market is down. I don't want to touch that right now. That's more than financial planning. That's peace of mind. To avoid the bigger risk, I eventually had to ask myself, what am I more afraid of? Retiring too early or retiring too late? Because money isn't the only thing I'm spending. I'm spending time. Another healthier summer might mean a road trip, time with my family, or working around the house on Saturday because I want to, not because I have to squeeze it in between Friday and Monday. Maybe I want to sit beside the pool on a Tuesday morning with a cup of coffee and my dog and realize there's absolutely nowhere I have to be today. Those days have worth too. Markets can recover. Spending can be adjusted, but one thing you can't do is buy another year at 60 years old. Look, I honestly used to think retirement confidence would come before retirement. For me, some of it came afterward. It came from seeing the bills get paid, watching the plan work, making adjustments, and realizing I didn't need to predict everything that could possibly go wrong. I just needed the flexibility to respond when something did. Being financially ready and feeling financially ready are two completely different things. At some point, my retirement plan has to become an actual retirement, because one of the biggest risks may not be retiring a little too early. It may be spending some of the healthiest years of my life waiting for a level of certainty that never comes. If you are on the cusp of taking the leap into early retirement, take it. Jump off that cliff. You'll thank yourself later. Look, I've spent decades turning my time into money, but retirement is when I finally get to turn some of that money back into time. Tell me in the comments, what's your early retirement goal date? And if you are already retired, tell me what surprised you the most in the first year of retirement. Hey, I hope you liked this video. If you do, please like, subscribe, and share, and I'll see you in the next one.